Hello, this is Jim Smith at GANanalysis.net, my website, www.GANanalysis.net. I'm talking Netflix today. At the square of the high, we anchor from this high here back. This is the unsplit price history at 7/16, July 17, 2015. That was the high. And then you create this box, which is basically what you're saying is we're using a price unit of 2. That means the 1 by 1, the red line, it moves down at a rate of 2 points per week. And when it crosses the 0 line, you complete the square of the high. So why is this important? Because where you see circles, it's catching turns. 1/4 of the way through the square, a low. This was a very important low here, halfway through the square. A high 3/4 of the way through the square, and then we chop around. I actually published this chart back in May of over a year ago, I think around May 7th. If you can look back through Twitter and YouTube, you'll see it. And when we were right about here, actually back here in May, I thought that this division here was giving resistance and that you would start down into May of 2022. I thought you'd have a 1-year slide. Turns out you got a rally, you broke out above this 2 by 1 line, the green line, which is twice the slope of the 1 by 1. So if this is 2 points per week, then this is 4 points per week. So when you got back above that line, it gave you the fuel to rally. But notice you stopped at the 1 by 2 line here. So this line here gave you the high. And when that happened late last year, I told clients you got to get out of this stock. It's very close to the old high. You have the threat. It's almost a double top. And we know it's likely to sell off into this completion of this cycle. This is a bubble stock. You had this hellacious rally. It was all, liquidity driven, sponsored by the Fed and the Biden administration. Fiscal and monetary stimulus up the wazoo. That gave you this unbelievable rally, not just in this stock, but all FANG stocks and tech stocks. They went too high. Then when you broke below this 1 by 1, of course, that confirmed the analysis that this 1 by 2 was giving you the high, and you got the big slide. Once you took out this 2 by 1, then you got the total waterfall decline. Notice you find support on the 50% division, which is half the high. 716 was the high, 358 is halfway down. That provided initial support, but I warned clients, reaction rally after the bounce off 50% mark, but when it closes below 358, the crash resumes. Sure enough, that's what happened. And I've been warning clients ever since this high back here that you're going to go down hard into May 27th, 2022, which now is a little over a week away. So you notice how the 3/4 division is giving you support. Maybe that's low, or maybe you take it out and have that final capitulation down into the end of May. This is just one stock. The cycles are not the same for Amazon or Apple or a range of other stocks. Each chart, the square of the high or the square of the range, is going to give you a different cycle. And for this stock, it's probably going to go down into May 27th and then at least a temporary low, probably the final low. But we'll see what happens when you get there. Honestly, I don't see the reason in trying to catch a falling knife. This is a broken stock. They're loaded up on debt and they're losing subscribers. All that stuff is in the news. You've read about that. But that's the nonsense they tell you after it's too late to get out. The GAN thing is to tell you up here that you should be lightening up and you should definitely get out when it takes out the 1 by 1, and you should maybe go short when it takes out the 2 by 1. I'm just saying this was progressively showing you more and more weakness with each GAN line that it takes out. And of course, the 50% mark, when you took out that, Katie bar the door, that was the end of the world for this stock. Then you get the total capitulation. We're still going down for another week or so. You probably will get a low, but does that mean you go in and buy it? Well, you might if you have, a strong stomach, but personally, I would not even go near this stock because it's a broken stock. They've got loads of debt. Could it rally back? Let's say you get all the way down here to, I don't know, 60. Then could it rally back to 190? Yeah, in a reaction rally, stuff like that happens. But I'm just saying that the real key here is not to own the stock after you see it fail at a 1x2 line, take out a 1x1, and then take out a 2x1. When that happens, you're going down into the completion of the cycle in time. The cycle in this case is the square of the high. Just as the midpoint of the square gave you a low, this one gave you a low. The quarter division, 3/4 division gave you a high. This is obviously giving you a low. That's how it works. Does it work every time? No, there are times when it doesn't work. Is it possible it might just keep going down after the completion of the square? Yeah, it is, but the square suggests strongly that it'll bottom at the end of May. But like I said, it doesn't work every time. So I'm not telling you to buy or sell. That's not what this is all about. This is strictly for education. But I want to leave you with an idea. If you are looking at this stock and you see the value of what I've shown you as of May of 2021, April of 2022, and again now, maybe you should think about subscribing because, hey, it's not just Netflix that is working according to the Gann principles. All the FANG stocks. You show me a stock, I'll show you. If you become a subscriber and you have a favorite stock, tell me what it is. We'll throw up some Gann charts on it and get you started. You cannot afford to lose this amount of money. If a billionaire fund manager tells you if you are upset about all the money that you've lost in the stock market, just don't look at your portfolio, I would tell him, no, thank you. I'd rather be doing Gann. I'd rather get out up here than to get out down here because we know that most people do not have the stomach for a 75% decline. And it may not be done yet. Most people do not have that kind of stomach. There are a lot of people want to say they're buy and hold. Not very many people can do it. And even if you can, why do it? That's the more important question. If you had access to this chart, which you could have seen on Twitter and YouTube a year ago, why would you not get out up here? Why? I mean, a year ago, it would have been right here. Even if you got out a little early, it went a bit higher. When you saw this, you knew trouble was ahead. Now, for argument's sake, let's say that, it didn't go up here. Let's say that it just kept going sideways here and then it could have started sliding in May, June of last year, over a year ago. That could have happened. In fact, I thought that might happen. But when you saw this 2x1, when it closed above that, then you knew it was going to keep going higher. But common sense would dictate that it's overbought when it gets close to the all-time high from July of 2015 on the unsplit price history. Remember, Gann used unsplit price history because from his perspective, the price that a stock traded at, that's what counts, not some fictitious synthetic version of price history for the stock. The synthetic history is BS. If you want to analyze a stock, you got to know where it traded. Unsplit price history. Your data vendor he wants to show you split price history. That's not right. You need to look at unsplit price history. Just yell at him if he's showing you split price history. Yell at him. You want unsplit price history. You want to know where the stock traded. And that's what you get here. That's what you're seeing. This is important. This is a classic example of Gann. But I can show you Amazon, I can show you Apple, I can show you Facebook, Google. Tell me what stock you're interested in. I will show it to you. Become a client and tell me what stock you want to see. I'll do it for you.